Welcome back to the Watch List. I'm Nicole Petalides. Welcome in Mish Schneider, Chief Strategist at marketgauge.com. Mish, you were talking about this sell the rally, sell into strength mentality. That's where you are right now. Yesterday, we've been noting the historic gains that we saw yesterday, but so much of it was short covering and or profit taking. If there were a rally tomorrow, would you be selling again?
Well, actually, selling the rallies, I think, is more from an active standpoint. It makes a lot of sense because the weakness has been not that reliable. However, yesterday may have given us a little bit of a different philosophy in that we did see some really good lows in place. And yesterday's reversal actually confirmed a potential bottom, mainly in different instruments. In terms of the overall indices, possibly in the SPY, if we're looking at 4,800, let's say, as a really good place for this whole thing to stop. So now I'm going, well, maybe it's time to buy down here. And we started accumulating yesterday, but have a very, very, very good stop underneath the low, because if things break down under these key support levels, who knows where we can go from there. So you have to control risk.
So we may have seen some bottoms. Boy, do I love that. I want to hear more. I mean, when you said maybe in the SPY, right, the S&P 500, maybe in what, specific names or other indices?
Well, maybe even in the, let's talk about the long bonds, right? Because that would probably be an interesting scenario without the Fed having to say a word if we found some kind of a tradable bottom 2 days ago when we had that flush and then the tremendous turnaround. What we're having today, although the yields are higher, it's an inside range of yesterday. So this is a great technical pattern, by the way, and it's pretty simple to explain. When you make a new multi-month low, and then you close up near the 25% of the intraday range, and the next day, sometimes you gap above it and it keeps going. But sometimes you have a digestion day, especially when that range has been so big. So what you want to look for in terms of your question about tomorrow is if we take out the high of the big range day after an inside day, and we look specifically at TLT, that would be at around 88.80. That could be an interesting bottom is in. At least we know that we have a limited risk.
You know, I think yesterday, I'm going back to bonds for a second. So yesterday's 10-year Treasury auction, the bond market sometimes drives the equity market, right? Because there was so much fear in the bond market and people were selling off in the equity market. Yesterday's 10-year bond yield, 10-year bond auction was a make or break, according to Barron's. And there was concern whether or not you would have foreign investment once again. Would the bonds be bought? And they were. And that really sort of solidified the mentality. That may go along with your idea of the bottoming process.
Well, and also the bonds are used as a great indication of risk on or risk off. So one of the classic relationships is how it's performing against the SPY. So for a brief moment in time yesterday, we actually had the SPY outperform because the SPY rallied further than what the TLTs did. Where TLTs have actually been outperforming, that's risk off. The same thing with the junk bonds. We want to see how the long bonds do versus the junk bonds. We always want the junk bonds to outperform because what bond traders are looking at in a risk-on environment is buying riskier companies that pay high yield. So we've had that flip where the bonds were actually outperforming the junk bonds. We want to see that flip. And if we start to see those two relationships flip, even with a long bond rally, what we want to see ideally is that long bond rally becomes a catalyst for the equities to rally even further.
Are you going to have stock picks for me today or no? I mean, you usually come on with like 10 or more stock picks. What are you picking? What are you buying? Are you long-term, short-term picks?
Well, I always have a laundry list, right? Because that's what I do. I sit and hunt throughout the entire board, and I look at everything from foreign equities to domestic equities, different groups, things that I think might outperform in commodities. So essentially, in that long laundry list, by the way, I did make 4 position trades this week for our clients on the discretionary side. And one of them, what might surprise you, it's uranium. And there's a couple of reasons why, URA, by the way, is because I saw exactly what I talked about before. It made a new low. It actually had a good relative follow through. And now I have a decent risk. I mean, really basically $18. But that's one reason. Second reason is because with oil falling out of fashion, maybe more of a domestic policy will lean towards the cleaner energy. Third reason would be maybe some protection against some geopolitical risk if things blow up more in the Middle East. But really, basically, it was the technical. So do I think that uranium can go up? I've never done well when I've bought strength, so I'm trying my hand at some weakness. So that's one. The second one...
That is interesting, yeah. I mean, and I saw you have several commodities on the list. You had corn, you had silver, right?
Well, silver, I was long silver and gold, by the way, for years. I mean, long before everybody had it on their lips. And that was because I can kind of see that things were going in this direction long before we had President Trump, because of the debt and because of the geopolitics and because of the spending and because of the talk about anti-dollar. You know, this is not new conversation. But I like the grains right here because they seem to be holding up. So this is exactly what I'm trying to look for in my hunt. Besides things that made a new low, consolidate, and then move up from there, I'm looking at things that have not made a new low, that have just been consolidating at a good price. Corn, wheat, soybeans, even sugar, a little bit more volatile. All these things right now are starting to show interest. And of course, that would also mean a little bit more inflationary should they get going.
Yeah, and what about tech stocks? Do you have any of those tech stocks or other big names that people will know that they just don't want to miss?
Well, I haven't seen that pattern I'm looking for. And, you know, this is a great time, Nicole, to be a rule follower. People could break rules like crazy for years, and the market was very forgiving. Now we can see it can be very painful. None of those tech stocks have really given me what I was looking for, and I'm interested in a few of them. But I will tell you one other great tip is that you want to look at another risk indication, and that's value versus growth. And value has been outperforming growth. That's risk off. If we start to see that ratio flip and growth can get a bid and start outperforming value, then I think we can take a fresh look at a lot of those tech stocks.
Okay, Mies Schneider, wonderful to see you, Chief Strategist at marketgauge.com. Good to see you. Thank you so much.